Imagine working for 30 years, paying off your mortgage, and finally holding the deed to your piece of the American dream in sunny Florida. Then, a single letter arrives in your mailbox. It's not a bill. It's a cancellation notice from your insurance company. No warnings, no negotiations. Just a cold statement saying your neighborhood is no longer profitable to protect. This is the terrifying reality facing thousands of homeowners across the Sunshine State right now. Major insurance giants are quietly packing their bags and abandoning Florida, leaving the middle class to face a hidden housing trap. And this is where things get ugly. For decades, Florida was the ultimate destination for retirement. Warm weather, beautiful coastlines, and a booming housing market. But behind the shiny real estate brochures, a silent financial meltdown is taking place. In places like Cape Coral and Fort Lauderdale, average annual homeowners insurance premiums have quietly skyrocketed past $11,000. That is nearly 4 times the national average. The media keeps talking about Florida's historic real estate boom, but on the ground, the reality is breaking the middle class. Homeowners are forced to make an impossible choice: pay a second mortgage just for insurance, or risk losing everything. Of course, not every area in Florida is collapsing equally, and some inland communities remain relatively stable for now. But for anyone living within driving distance of the coast, the economic tide is turning fast. Why are billion-dollar insurance conglomerates walking away from one of the wealthiest states in the country? The corporate narrative blames climate change and rising sea levels. But here's the part nobody talks about. It is a math problem, and the numbers do not add up for Wall Street anymore. Florida accounts for less than 10% of all homeowners insurance claims in the United States. Yet, it accounts for nearly 80% of all property insurance lawsuits in the entire nation. Combine that litigation crisis with a 35% explosion in rebuilding costs due to inflation, and the system breaks. When global reinsurance corporations in London and Zurich raised their rates, American insurers decided it was safer to flee than to fight. But you have to wonder, are these corporations protecting themselves, or are they abandoning the people who paid them premiums for decades? Naturally, insurance companies are businesses, not charities, and they must protect their solvency to survive. But their survival is triggering a domino effect that is crashing down on local government. As the private market vanished, the state of Florida stepped in with a safety net called Citizens Property Insurance. It was designed to be the insurer of last resort. Instead, it has become the largest insurer in the state, holding over 1.2 million policies. But this safety net is a financial mirage. If a Category 5 hurricane makes a direct hit on a major metro area like Miami or Tampa, Citizens could completely drain its cash reserves. And here is the hidden trap written into the law. If Citizens runs out of money, the state has the legal authority to levy a mandatory tax assessment on almost every insurance policy in Florida. That means even if your home is perfectly safe inland, you will be forced to pay out of your pocket to bail out the coastal luxury mansions. Would you be willing to pay an extra tax just to secure someone else's beach house? To be fair, state officials are actively auditing the fund and attempting to transition policies back to smaller private firms. However, as long as the fund remains overloaded, the threat of a massive financial shock hangs over every resident. The crisis gets even deeper when you look at the banking system. Many homeowners think, I'll just drop insurance and take the risk. But if you have a mortgage, you don't have that choice. Over 60% of homes in Florida are tied to a bank loan, and federal regulations strictly require active hazard insurance. The moment your policy is canceled and you can't find a replacement, the bank steps in. They will force place a temporary insurance policy on your home. The catch? Force-placed insurance costs up to 4 times more than a standard policy, and it protects the bank's investment, not yours. If you can't afford that new monthly payment, the bank will move to foreclose on your property. The headlines claim buying real estate is the best path to generational wealth, but right now, it is turning into a mortgage trap. How long can an average family survive when their monthly housing costs double overnight? Granted, wealthy cash buyers who own their homes outright can bypass this banking pressure entirely. But for the working class, this financial squeeze is initiating a quiet exodus. We are now seeing the beginning of a major shift in American migration trends. Recent data from the Census Bureau shows a growing number of middle-aged and retired Americans are quietly packing up and leaving Florida. They aren't leaving because of the weather. They are leaving because they are being priced out by fixed costs. The media highlights the thousands of wealthy people moving into Florida every day, but they ignore the families quietly moving out to Georgia, the Carolinas, or the Midwest. The dream of spending your golden years under the palm trees is being replaced by the reality of economic survival. Is Florida on track to become an exclusive enclave purely for the ultra-wealthy? Of course, population shifts are a normal part of economic history, and Florida's economy still shows job growth in other sectors. Yet, this steady departure of the middle class is creating a dangerous surplus of homes that nobody wants to buy. This brings us to the ultimate consequence, the destruction of home equity. A property that was worth $600,000 2 years ago can drop significantly in value if a buyer realizes it cannot be insured. When a potential buyer looks at a house and calculates that the insurance premium costs more than the property tax and interest combined, they walk away. The housing market relies on predictability, and right now, Florida real estate is highly unpredictable. The traditional narrative tells us that land near the ocean always retains its premium value. But that rule only applies if the global financial system is willing to back it up. Obviously, luxury high-rises with advanced storm engineering are managing to hold their value quite well. But for the average single-family home in a suburban neighborhood,